Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Friday, January 8th, 2021. And here are our top stories. Bitcoin's birthday boom and a joint health venture folds. Well, joining me now to discuss this and more, we're going to welcome him back from a very happy new year. We've missed him, Mr. Devin Banerjee. He's Senior Financial Services Editor for LinkedIn. He's also the editor of the This Week in Finance newsletter, which of course you can find on the LinkedIn platform. Devin, great to see you. Thanks for joining us. Welcome back to the program.
Thanks a lot, Jeff. Happy New Year, and it's good to be back with you.
Absolutely. We're excited. Great stories that you've always covered for us in the last 2 years on the podcast and here on the network. Let's jump in to Bitcoin because Bitcoin had a birthday boom. I love that alliteration. Bitcoin birthday boom. What can you tell us?
Yeah, it's absolutely been everywhere in the news. Of course, I should caveat that everywhere in the news until the news midweek this week of the attempted coup on our democracy. But putting that aside for the purposes of this segment, it's just been everywhere in my LinkedIn feed and my Twitter feed. And there are several reasons for it, but the primary one is that it's booming. It's surging. I'm looking at the price chart right here as we're recording this. Full disclosure, it's about midday Thursday, but just about to breach $40,000 for the price of Bitcoin. Just 12 months ago, we were looking at about 8,000, and so it's really surging. And there's several reasons for that, and they're all kind of related. But one of them that I'll mention, a huge driver, is a lot of people are saying this time is different. This boom in Bitcoin is different from that, especially the one of 2017, which was another very dramatic run up. And a lot of people are saying this one's different because of the institutional investor interest, the professional investors that are starting to step up and allocate capital to Bitcoin. So names like Paul Tudor Jones, Stan Druckenmiller, Scott Minerd, to the layperson on the street, these names may not mean much, but of course in the investment world, when these big hedge fund names express interest in an asset class or a strategy, a lot of other investors and a lot of investor dollars follow. And so as one Bloomberg strategist, Mike McGlone, was saying yesterday, or a couple of days ago, this time Bitcoin is really crossing into the mainstream for investors. And there's now this reputational risk associated with the naysayers. So there's some risk associated with those who used to be able to say, I don't understand it, I'm not going to touch it. And now those people's investors or their limited partners are starting to question that naysayer mentality. Also in the news this week and attributed as a driver for this run up is a research note out of JP Morgan, setting a price target, if you will, for the future, or an expectation for the future of about $146,000 for the price of Bitcoin. It sounds like an odd, arbitrary number, but it's coming from matching the potential market cap of Bitcoin to that of gold. All of the private investment that currently is in gold in aggregate would take Bitcoin to about $146,000 on the price. Now, look, again, it's all across the financial news websites and my social feeds because of the very impassioned debate that Bitcoin always provokes. Of course, there are people on one end of the spectrum thinking, Bitcoin and other cryptocurrencies will change the world one day, and there are those on the other end who still think it's a fad or even a scam. So of course the bull case, I mentioned gold. The bull case, and especially this week, is that comparison to gold. If you think about gold, the function it serves for investors or for people is it's really that store of value. And it's that certainty in the store of value, regardless of what happens, out there in the world. Banks may fail, governments may fail, Armageddon, protests in the streets, anarchy, what have you. Gold retains its value. And so a lot of people look to Bitcoin and say, Bitcoin can act as that hedge. It's easier to store than bars of gold. It's harder to steal than bars of gold. It's more portable. So as one investor said a couple of days ago, Bitcoin is in some ways better at being gold than gold is at being gold. And so that conversation is back this week as well. And the last thing I'll mention, at least this week, is another driver we're seeing is some more clarity in the regulatory frameworks around Bitcoin and digital assets. Just on Monday of this week, the OCC, the Office of the Comptroller of the Currency, which is the main U.S. banking regulator, published guidance saying U.S. banks can appropriately use blockchain technology and what are called dollar stable coins, which is a class of less volatile cryptocurrencies, as settlement and payment infrastructure. And so that opens a huge potential and possibility for banks to start using digital assets for that settlement infrastructure. We're also in this transition period of administrations, and since the slate of Joe Biden and Kamala Harris and their transition team started to be announced a couple of months ago, a lot of people in the crypto community are also very optimistic about some of the names being floated for positions or being named to positions. A primary one is Gary Gensler, who's been leading the financial policy transition team. He is very friendly to the crypto community. He has said in the past that he wants to see that technology succeed. He believes there's a place for it in the banking and the existing financial system. So all of these things are coming together this week, Jeff, and driving the price up just dramatically. I'm looking at the chart live here on the screen, almost at $40,000.
So Devin, that begs the question. I mean, should I be running out and buying Bitcoin? And I know we're not giving financial advice, but what does this mean, in all seriousness, what does this mean for the regular investor out there? I mean, there's this legitimacy, and it happens with every asset class, and from alternatives to hedge funds to traditional equities, where there's a legitimacy period. But what does this mean for the person on Main Street?
Yeah, it's a fantastic question, Jeff, because we should also mention a lot of other, not counterpoints. We're not arguing the merits here, but at least some facts to consider. And the most important one is the volatility of Bitcoin. First of all, I mean, it is a stomach churning, nauseating ride for those holding Bitcoin. So this is not, a general statement. It is not for the everyday investor out there. It's extremely volatile. That run up in 2017 I mentioned was followed by an 83% loss in value, a drop in value after that. So again, really stomach churning. And then there are very strong naysayers. I mentioned some of the bulls of big names. I mean, there are people like Warren Buffett or Howard Marks, very long-time accomplished investors who continue to say they don't understand it, or they understand that it has no intrinsic value. It produces no cash flow. It's not backed by, of course, any government or central bank, which the bulls think is a good thing. But there's this greater fool theory out there, especially this week, which is to say, those who buy into Bitcoin are maybe acting a bit foolish, buying into something with no intrinsic value, even though the price is increasing. But really, what they're banking on, what they're betting on, is that there is a greater fool down the line to whom they can sell it to at a higher price. That's the greater fool theory. And so the bears are saying this is really the only thing driving the price of Bitcoin, right? You can't do a discounted cash flow model or a dividend discount model on it. There is no cash flow, and so it's just this speculative instrument, and it holds value to the extent that people agree it holds value, and that's the only thing propping it up. So there are still people out there who think it should go to $0 in the price. Now, I should mention, just kind of to create a middle ground here between those polarizing cases that we've just talked about, there is some mainstream adoption occurring out there, actually utilizing this currency. So I should mention a couple months ago, I think it was 3 months ago, PayPal made some waves, allowing all of its users to buy, hold, and sell Bitcoin directly. Square has a similar product. There are merchants and businesses out there that have, adopted it as a form of payment, as a currency. Overstock.com for household items, Expedia for travel, even Microsoft, which I should mention is the parent company of LinkedIn, allows gamers to pay for Xbox games and associated apps using Bitcoin. So there is some of that adoption out there. I think that will, keep it going for now. But again, this greater fool theory can only last so long. Again, it has value to the extent that people agree it has value, and we'll see how long that lasts.
Well, thanks, Devin. I think it just comes down to buyer do their due diligence so that they understand exactly what they're buying, regardless of the asset class. Well, Devin, I want to take a quick break, but when we come back, we'll talk about a health joint venture that is folding. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Devin Banerjee of LinkedIn. Devin, thanks so much for staying with us this morning.
Absolutely, Jeff. Happy to.
So let's shift from Bitcoin. Let's talk about a joint health venture that got a lot of accolades, a lot of news many years ago, but it's actually folding. What can you tell us?
Yeah, Jeff, this is that joint venture between three of the largest and most powerful American companies, JP Morgan, Berkshire Hathaway, and Amazon. And this joint venture was called Haven. A lot of people will remember a lot of the press and the talk around it about 3 years ago when it was announced. And its mission was to disrupt healthcare, or maybe more accurately, to solve the healthcare system and all of its and a lot of its challenges. And so this venture aims to find ways to lower costs in the healthcare system, to increase access to healthcare, and to improve outcomes from the healthcare system. And so, these three companies started by experimenting with their own healthcare policies with their own employee base across the three of those companies. It was about 1.2 million employees. This joint venture, Haven, had built up about 60 employees. It had attracted some great executives. Atul Gawande, the acclaimed surgeon and speaker and healthcare expert, had been attracted as CEO. And yeah, the news, Jeff, is that it was announced a couple of days ago that this venture will close, will fold. Those employees, or at least most of them, will be spread across the three companies, JP Morgan, Berkshire Hathaway, and Amazon. And these companies will continue to experiment, but on their own, and continue to experiment, but with their own employee bases. So of course, the big question on people's minds is what happened? What caused this? What happened behind the scenes? There was a lot of fanfare, a lot of money behind this investment. The leaders of each of those companies, Jamie Dimon of JP Morgan and Warren Buffett of Berkshire Hathaway, Jeff Bezos of Amazon, all of them had personally expressed a lot of interest in this venture. So according to some of the great reporting out there, one key issue was that each of these founding companies really, even though they were collaborating on ideas and experimenting with ideas, ended up then, of course, going to execute on those ideas and those projects separately with their own employee bases. I mean, these are three different companies. You cannot, one company's policy cannot extend to the employees of the others. And so they eventually ended up kind of executing and finding unique challenges themselves along the way with their own companies, and then changing and innovating on their own. So of course, that obviates the need for a joint venture to begin with. It's also a sign of just how difficult and how complicated and how entrenched specifically the American healthcare system and all of its components are. It's a complex system, as you and I have talked about many times, made up of doctors, of insurers, drug makers, middlemen, all together costing Americans about $3.5 trillion a year. And so it was actually interesting. About a year ago, Warren Buffett gave a nod to this in an interview about another topic, but was asked about Haven. And he said, he always expected that, this joint venture and the mission it was achieving would be ungodly difficult. And he pointed to that issue of the entrenched interests. He said, there will be lots of opposition to any proposed changes. And that, I think, is what this venture ran into. But there was a lot of fanfare, as I said, when it was announced. People might remember the stocks of a lot of insurers and drug makers at the time, like United Health and Humana and CVS had fallen. They, of course, as this was announced a couple of days ago, jumped again. And as I said, these companies said they will continue experimenting, but basically on their own.
Well, Devin, it doesn't surprise me. As you said, it's hard to invoke change. It's hard to make change, whether it's change in healthcare or in other industries. And I'm wondering if real change is going to come, does it come from a startup? Do we, we've talked about telehealth on this program with you and with others. Yep. That seems to be something where that mindset has really driven some change in healthcare. You look at what Amazon has done with prescription drug prices. I mean, change is possible, but maybe it takes a startup mentality, and maybe the idea was sound, but the approach for Haven maybe just wasn't sound.
Right, and that's been a big part of the conversation that emerged this week, which is disruption is really going to come from some individual disruptors, and it's going to be hard to get together and try to attack it at an aggregate level. And so a lot of people are looking to the technology sector. You mentioned Amazon. They do own this online pharmacy, PillPack, which was a company they acquired back in, I think, 2018 for about $750 million. And a couple of months ago in November, Amazon launched plans to start shipping prescriptions and shipping drugs directly to customers. And that at the time sent drugstore company stocks tumbling, like Rite Aid, Walgreens, CVS, GoodRx because of course, the reach and distribution and technological prowess and user experience and user interface that Amazon has, and its ability to compete on cost. And so, tech companies are certainly a potential source for this disruption. We do see startups innovating quite a bit, especially during this COVID period. We do see, the technological acceleration that's occurred during this COVID period, which, people say, 5 years of technological development was forced to happen in the past 12 months. And so we've seen that with telehealth and other innovations. And so that should continue. And so, yeah, that's sort of where people are looking now.
Well, that's going to be interesting. And I to me, as we wrap up this segment, I in the show, I just think that both segments are in a way aligned because the underlying technology of blockchain and the disruption to remove the middleman, it all is done to reduce costs. So I think it's nice to see this is what technological innovation can look like. It's not pretty. It's oftentimes messy. Building something from the ground up is oftentimes messy. Well, Devin, it's a pleasure having you back on the program. Great to see you. I'm glad you enjoyed some time off with your family. And we look forward to having you back on again next week.
Thanks, Jeff. Take care.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our newsletter, The Morning Pulse. Don't forget, we're back again tomorrow for BRN Weekly. We'll be taking a look back at some of our best segments for the week, and we'll also have a very special guest. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.